Okay, well, welcome back, ladies and gentlemen. We're at this excellent fireside now on Islamic finance and moving from halal to Tayyib, accelerating Islamic sustainable finance. It's a real honor and pleasure to be joined by two experts with us for this panel. We have Shireen Osman, a director from PwC Dubai with us, who leads a lot of the firm's work on Islamic finance with auditing the various Islamic financial institutions there. And we have Salman Siddiqui, asset manager at Jupiter Asset Management, joining us from London. So thank you to both of you for giving us your time to join this session. Islamic finance, as many of us know, is a faith-based form of finance, would expect us to have it very much aligned with ethical and sustainable principles. What I'm hoping to understand from both of you during the course of this fireside chat is actually how far is Islamic finance embracing sustainability? What's working, what's not working, and where do we see the opportunity for Islamic finance to advance that? So to kick off, I'd love to ask Shireen, ask you the question. The title of this session is Halal, moving from Halal to Tayyib. Please, first of all, can you just explain to us and everyone watching, what is the significance of the concept of Tayyib in Islamic finance, and how does it differ from the understanding of halal? I'm conscious at COP28, together with the UKIFC and indeed us at Jeffy, you launched the Tayyib-inspired secretariat. So please do explain this to us first.
Sure. Thanks so much for the introduction, and quite happy to be here today. So the Tayyib concept basically moves Islamic finance from being a pure compliance from a halal paradigm to one that now considers and focuses on the spirit and purpose of Sharia, that being the maqasid. If you simply look at the meaning of Tayyib, it refers to something which is pure, clean, or wholesome. And what that means for the Islamic finance ESG market is transcending it from the tick box of just halal to looking at whether products holistically are evaluated against its contribution to society. As you said, yes, we were quite proud to be part of the launch of Project Tayyib with yourselves at Jeffy and UKIFC. The Tayyib framework aims to be a practical tool for the Islamic finance instrument issuers, and that will align the maqasid within the ESG framework. Us at PwC, we are proud to be the exclusive technical partner to the Secretariat, and our role will be to support in the development and implementation of the framework, as well as then to provide issuers who aspire to obtain the certification, the assistance in the form of gap analysis or roadmaps.
Great, thanks, Shireen. So you're saying you've taken the concept of Tayyib and Tayyib inspired to integrate ESG and sustainability principles into the current practice of Islamic finance, which is principally been negative screening within Islamic asset management specifically.
Yes, exactly that.
Right. So then Salman, if I can bring you in on this. So we're saying the Islamic asset management world has been negative screening to date. Of course, it also has some financial ratios as well, which are applied through its leverage screens. But can you tell us a bit more about, within the Islamic faith and Islamic asset management, the role and understanding of concepts of stewardship and sustainability, and how is current Islamic finance, Sharia compliant investing, fulfilling these duties?
Yeah, sure, absolutely. Thank you. Look, I think that you're right. Stewardship and sustainability are very much embedded in our faith. As Shireen said, in terms of the spirit of Sharia, the Prophet Muhammad, peace be upon him, said the earth is green and beautiful, and God has appointed you his stewards over it. Whoever plants a tree and diligently looks after it until it matures and bears fruit is rewarded, etc. And there's lots of examples of that. And it was really interesting for me as a fund manager, because I've been managing conventional funds for around 20 years. And just 2 years ago, I had the chance to take on a Sharia mandate. And it was interesting because a few months prior to taking on this mandate, my team and I had just completed a big ESG engagement with a Chinese sportswear company, where we had been becoming increasingly concerned around the risk of forced labour in the company's cotton supply chain. As many people will know, most of the cotton in China comes from Xinjiang region, where there have been numerous concerns around the possible use of forced labour. And so we were very keen to ensure that at least this company that we were talking to, its supply chain was clean. And we spent a long time trying to understand their workplace, their labour practices, the practice of their suppliers, all the way down to that cotton field. There was much back and forth. In the end, we were not able to get the assurances that we felt we needed, and we ended up divesting from that company. Now that's quite a rare thing, to divest from a company. Obviously, what we like to do is to be a force for good, to encourage and engage, but in this instance, we felt that wasn't an option. Now, it was interesting for me because fast forward a few months when I took on the Sharia mandate and I looked down the list of companies included in the Sharia index, then one company popped out, jumped out at me, and of course, it was that same Chinese sportswear company, and it really got me thinking, surely God would also want us to consider labour rights. And of course, he does. The Prophet Muhammad, peace be upon him, said, your workers are like your brothers, pay your workers before their sweat has dried up, etc., etc. And of course, as Shireen said, the reason why this company made it through is because on that negative screening, of course, sportswear is fine, right? It's not tobacco, it's not alcohol, it's not interest-based finance, gambling, etc. It's not one of those traditional sin stocks. In other words, we are focusing purely on what a company produces and not how those products or services are produced, and in doing so, perhaps missing some of that spirit, as Shireen mentioned. And so, I guess for me, certainly when I took on this mandate, and I said this to the client, I said, look, I'm the fund manager, but I'm also the target customer of a product like this, and I wouldn't buy it because I feel that it doesn't really align with my values. And I felt we had a really unique opportunity to try and create a product that went beyond just negative screening. Yes, fine, it has that Sharia compliance, but also goes beyond that to true active ESG engagement as well.
Great. So Jupiter's got a great pedigree in sustainable finance and ESG investing there. And I guess then the question to me is, and Shireen, I'll come to you on this. We have Sharia compliance, we have ESG as is practiced in conventional mainstream. We've mentioned now Tayyib, you've mentioned the word Maqasid, and we have, we're now beginning to see Islamic sustainable finance, particularly in the UAE, where the central bank has issued guidelines on this just ahead of COP. Irrespective of terminology, to what extent are you seeing Islamic financial jurisdictions embracing sustainability? Apologies, that's a fire alarm, but please do continue.
Yes, Umar. So I think what we witnessed last year during COP28, being the year of sustainability, was a clear call to action from all nations. And so the progression from there is that the industry is basically going through an evolution in trying to meet those targets and the promises that were made. COP28, I feel the fact that it was hosted in Dubai itself, in the UAE, sorry, was a catalyst and was a sort of a push for the Islamic finance industry because it needed that exposure and for people to realize the link between the two. And I feel what we've seen since then is that Islamic financial institutions globally have started to become a lot more active with this drive from COP28. I read recently an S&P which estimates that global sukuk issuance for 2024 is likely to be somewhere between $160 and $170 billion. And I believe that a fair chunk of that is going to come from sustainable sukuk. If we look at the ASEAN region, and if you see the key issuers in that region, you're looking at Indonesia and Malaysia. Indonesia has been quite active in the space for quite some time. I think the fact that it's got its Muslim majority population, it's susceptible to climate-related disasters, and then its own socioeconomic issues, it aligns itself quite well within that ESG Islamic finance agenda. And so we'll continue to see a number of issuances come out from Indonesia. Malaysia recently announced a number of tax incentives to promote its targets and combat social issues. So there as well, we'll continue to see a lot of activity come through. If I come closer to the Middle East, the the core Islamic finance countries' financing requirements will continue to be strong, particularly from Saudi Arabia with its Vision 2030 initiatives, diversification away from oil. And then in the UAE, I think, like I said, with COP28, we've seen quite a bit of activity come out from the UAE itself. And it's not just from Islamic finance institutions, there's also the non-Islamic finance institutions that have had some activity. I'll give a couple of examples like Diwa and Mazda's solar park. That went through another round of funding. The China Construction Green Bond, the Dubai Islamic Bank, which launched a sustainability links to Sukuk, the third of its kind. And then also governments. So we've had the government of Sharjah, which issued their sustainable bond. So there is definitely quite a lot of momentum.
So you're seeing a strong market case, a strong demand. And Salman, are you seeing the same as well? What from your lens, how are investors in the kind of ASEAN region, how are they engaging with ESG? Are they more or less engaged than what you're seeing in Europe? And if so, what can be done to increase the momentum in terms of growing assets in Sharia compliant funds, which are sustainable as well?
Yeah, sure. Look, I think that it kind of varies from country to country. I mean, certainly Malaysia is a real pioneer, of course, in this Tayyib space. But it's interesting because I think investors in Asia and Middle East are often perceived as being lagging behind the West in terms of ESG considerations. But actually, there was a study done by Schroders and Maybank not too long ago, which actually showed that sustainability and climate change could be a greater consideration in Asia and Middle Eastern investors than in other parts of the world, which I thought was quite interesting. But if we take a step back and look at kind of Sharia AUM as a whole versus the ESG space, I mean, we can see that whilst Sharia AUM has grown, it has grown much slower than the traditional ESG space. And there's kind of an enormous order of magnitude difference in terms of size. And, you know, we believe that if Muslims were able to better incorporate their Islamic values into their investment decision-making, so it's not just that kind of tick box, then I think we could start to see greater momentum in terms of the growth of assets. I mean, we obviously mentioned COP earlier. I was at COP as well. And I think for me, one of the key takeaways was that there is a real drive and a real desire to move away from simple negative screening. And I think definitely anyone under the age of 35, you know, when they hear negative screening, their eyes just kind of glaze over. You know, they're just not interested. What they want to see is something much more meaningful, much more impactful. And that's why I think this conversation is so important.
Great. Well, look, thank you so much, Salman. Shireen, I'm conscious we have just run out of time there. So I just want to say a huge thank you once again to both of you for sharing this. Very much looking forward to see how Islamic sustainable finance as a market space, as a thematic builds out. At the UK IFC, UK Islamic Finance Council, from the work they've been doing with the Global Islamic Finance and UN SDGs Task Force and the High-Level Working Group on Green and Sustainable Sukuk. As you mentioned, Shireen, last year that market crossed 10 billion of issuances, which represents nearly 6% of all Sukuk issuances. So absolutely an exciting space, considerable market opportunities, but also, as you said, Salman, the right thing to do, which people, fundamentally consumers at all levels, want to see their values and their faith aligned in that progressive manner, above and beyond the negative screening, the do no harm. Fantastic insights. Thank you once again to all of you. And I'll hand back to the MC. Thanks. Bye-bye.